Okay, welcome to part 1 of the 8 tools you should never use in your Forex trading. Now, if you're just tuning into this channel your first time, I recommend you go back to the intro video. That will explain what this 8-part series is going to be about, because I think that's truly important. But if you're brand new, this is video 1. It's going to be an 8-part series talking about the 8 technical tools you should never use in your Forex trading. And in each video, I'm going to explain exactly why, show you how it's used, why people use it, and why you should never use it. So the first one today is going to be our handy dandy trend line tool. I know a lot of traders use the trend line tool, and today I'm going to show you exactly why you should never use the trend line tool. So the first criteria that we're going to cover is, what are they? So if you don't know, obviously it's pretty self-explanatory. A trend line is basically a line that you put onto your chart, and it kind of shows you the trend of the market, right? As we can see, a beautiful trend line right here. It's respecting this so well that I would even want to place a sell on this, and many people do. So I'm not going to go into too much of how this works, because a trend line is pretty self-explanatory, and if you don't know what it is, that's kind of on you. So many of you have probably heard the term, the trend is your friend, but I want you to think about this. The trend is your friend until the bend at the end. A lot of people that think that trend lines are super trustworthy, and if they just have 2 taps, 3 taps, 4 respects on that line, it's going to respect the 5th time or the 6th time or the next time. And what people don't realize is that you never know when the market is going to reverse on you. And another reason I don't like trend lines and I don't like people using them is because it's so subjective. And the only time trend lines really work is in hindsight. It's after the trade has played out that you actually understand what happened. But in real time, it's almost impossible to understand what's going to happen. And using a trend line is not going to help you understand where the market is going to go next. Even though many people think that if the trend line looks well, it has to be that way. So for example, in hindsight, looking back on this was a beautiful trade, and I bet you a lot of people marked this up and would have taken this. I mean, I don't blame them. Look, it's got 1, 2, 3, 4, 5, 6, 7 touches, right? It's a beautiful trade. I think anyone would have taken this, but it's so easy to see something like this after it's already played out. You could have been like, I could have sold here, or your Forex teacher or guru could have told you to sold here. But in reality, like, how do you know when this is going to break, right? How do you know if it's not going to break here or here or here or here? And it's so easy to do it in hindsight, because you know which time it's going to respect and which time it's going to break through. So now let's say you missed this entire thing and you're right here in the markets, and you're like, wow, it's going to hit again. It has to respect because it's respected 6 other times. This is a perfect trend line. So you take your sell right in this area. Your stop loss is right above. It goes in your direction for a bit, and then it just completely breaks your entire trend line. Now, another thing that I want to show you guys is people like market movers and banks understand that there are trends in the market, and they understand that you are using these trends, and they use that against you. For example, this I can guarantee many traders lost money on. And let's just see what's going on right here. So obviously we have the origin of our trend line. We have our second touch, which now validates it, because anytime price comes within this area and it respects it, it's got to drop. So let's say we took the sell here. Oh, sweet, we just made a lot of profit. And sure, maybe a lot of sellers did make money here. Their stop loss was above here. They made a lot of money. But let's say it comes back over here, right? You take a sell. Maybe you missed this the first time, so you're first entering here, or you're selling again, and you put your stop loss above the high. What happens is it kind of consolidates, and then boom, price completely just takes out every single seller possible with this massive 1 candle, and then drops. And do you really think that this trend line has to respect what the market is doing? No. And another thing is, it's completely subjective. So meaning I may see a trend line here, but you may see a trend line here. or another person may see a trend line here. And so who's right? Who is right to sell? Who is the correct seller? Who is the correct in all of this? And the answer is no one, because trend lines are so subjective, and until you actually understand how the Forex market works, a trend line is just something that you're hoping will play out. Because if you're looking to buy, you're going to adjust your trend line to the point where it looks the best, where it looks the sexiest, where it looks like it's going to make you the most money. And then what happens is, all right, we found our trend line. It's here. It respected here so well. I mean, just look at that candle. It touches here. We're in a little bit of profit, and then you get taken out, right? And sure, you can make money with trend lines, right? You can be correct. You can place your trend line here, and maybe you made money on this sell or whatever. But using it as a reliable tool in the markets, it's just impossible, because using it in hindsight, it's so easy to tell what the market did because it already played out and you can see it. But using it in real time, I mean, are you really going to put your hard-earned money on the line for just saying this is a valid trend because we have our first touch, our second touch, and if the market comes back, it has to respect. My stop loss is here. It has to do it. Or maybe we have a trend line right here, right? And so using just trend lines, I would highly advise to stay away from. Now, I'm not saying if you use trend lines in confluence with other things, but using trend lines, I would stay away from. I would ill-advise them. I'm not a big fan of them. I don't use them, so I wouldn't want you guys to use them as well. They're too subjective, and they're just not accurate. And so why would you place your money on the line using something that is just an imaginary line? Because there are trend lines all over this market. They're everywhere. So that is video number 1. I want to keep it short and sweet and simple, and I want you guys to back test this to see what I'm actually talking about, because it's not just on this chart, but it's on every single chart and every single time frame. So trend lines are a big no-no. You can use it in confluence with other things, sure, go for it. If you've made money using trend lines, good for you. But any new traders, I would highly advise to stay away from, because trend lines are not how the market moves. They are just imaginary tools that people typically use in hopes of catching the next buy or sell. And if you want to make money in these markets, you need to understand who moves these markets and how they actually work and how this all plays into it. So if you're brand new to this channel, make sure you subscribe down below, so that way you can learn how to actually trade in these Forex markets with a smart money concept and not just trade using a retail mindset. And again, this is an 8-part series, so tomorrow we're going to do part 2, and every day after that we're going to do a new video until we reach the 8th technical tool. So tune in for tomorrow's video, as we're going to cover part 2, which I'm keeping that a secret. So I'll see you guys on the next one.